How do you think investors should be behaving at this point? How engaged should they be with European stocks?
So I think we have to look at the picture from three standpoints. So first is inflation, then is growth, and then is market valuation and stress. So on the first place, on inflation, I think we are seeing in the US and in Europe plateauing at a high level. I think Bullier just said yesterday that there would be a strong front load in November and until the end of the year, and then it will be more tactical rather than 75 kind of rate hikes. The US inflation is more worrying than the European one, I would say, because it's more not only energy, but it has spilled everywhere. While in Europe, the inflation rate is really linked to energy, and if energy prices start to stabilize, then things will get better. So inflation, on the inflation point of view, I would say plateauing at a high level. In terms of growth, there the picture is more problematic. And I think for investors, they've been moving from pricing higher inflation to pricing recession. And today, I would say the market is pricing strong revision, but not yet recession. So in terms of growth, not a rosy scenario. You will see the numbers of IMF coming out the other day, downgrading most of the country in terms of growth, with some countries in Europe flirting with recession. Finally, in valuation, obviously valuation has been going down 20%. The problem is in terms of valuation, in terms of PE, the problem is not the price anymore, it's the earnings. And as you say, there is little visibility on earnings yet. So that's why investors remain on the sideline. Nevertheless, what I would say is that you see retail investors having a lot of cash sidelines. Some numbers are around 10% cash. In a period of high inflation, cash is a very good solution on the short term, but not necessarily on the long term. So we believe that if the bond markets start to stabilize, then we could see some money coming back in equity, which remains a very good asset class when there is inflation.
Yeah, no, I think that's a terrific point. But again, it's sort of a circular argument, isn't it? Because it comes back to the question of when inflation begins to moderate and cool as to whether you buy back into bonds or whether you re-engage with equities.
We start to see institutional investors starting to re-engage with bonds. Obviously, the kind of institutional where we are talking about pension funds, which have generally a liability which is fixed. So bonds which were underweighted mostly in portfolios since the last 18 months are starting to come back, which is a positive sign. And we still see that for us, the inflation will stabilize in the months to come and start to decrease, but remaining at a high level on a historical basis. So I think it's going to be bumpy perhaps for the next months, but the situation should start to stabilize.